Taipei, June 2nd, 2026. COMPUTEX, the world's largest tech trade show, is underway. Two people are on stage. One is Marvell CEO Matt Murphy, midway through his keynote. The other just walked on uninvited. Jensen Huang took the microphone and said one sentence. "Ladies and gentlemen, the next trillion-dollar company." That was it. Marvell's stock closed up 32% that day, the biggest single-day gain in the company's history. Most people's first reaction, what is Marvell? That question is worth answering properly, because Jensen Huang doesn't say things like that for show. There's a very specific industrial logic behind it. And that logic connects to a hidden war inside AI infrastructure that almost no one is talking about publicly. Let's start with the basics. Marvell Technology, NASDAQ MRVL. If you'd asked what this company did 10 years ago, the answer would have been unremarkable. Hard drive controllers, networking chips, consumer electronics, the kind of company you've never heard of, but whose chip is probably sitting inside your home router right now. But over the past few years, Marvell made one decisive move. It refocused everything on a single market, the data center. The numbers say it plainly. In the most recent quarter, Q1 fiscal 2027, reported in May 2026, Marvell posted total revenue of $2.418 billion, up 28% year over year, a new company record. Of that, data center revenue accounted for 76% of the total. Put it another way, for every $4 Marvell earns today, more than $3 come from AI data center infrastructure. This is not the same company it was a decade ago. So what does Marvell actually do inside a data center? To understand that, you need to grasp one fundamental tension in how AI clusters are built. You've probably seen Jensen Huang show off the Blackwell rack. 72 GPUs packed into a single cabinet with a dense web of yellow cables running out the back. Those are copper cables. Inside a single rack, GPU to GPU distances are under 2 meters. Copper works perfectly. It's fast, cheap, and draws almost no power. The problem is that nobody trains AI on a single rack. Companies like Meta, Microsoft, and Google run clusters with tens of thousands, sometimes hundreds of thousands, of GPUs. Those racks have to communicate across tens or hundreds of meters. At that point, copper breaks down. At 800 gigabits per second, a copper cable starts losing signal integrity past about 3 meters. So when data has to travel between racks, AI clusters have to switch to fiber optics. Here's the analogy. Think of a data center as a massive factory complex. Within a single building, machines on the same production floor pass signals to each other like notes across a room. Copper wire, quick and cheap. But when building A needs to talk to building B across the campus, you need to run the high-speed rail line. That's fiber optics. Carrying data as light across distances copper simply can't handle. The catch is that GPUs speak electricity, not light. The signal coming out of a GPU is electrical. Fiber optics carry photons. They're incompatible by default. So at both ends of every fiber link, you need a translator. Something that takes the GPU's electrical signal, converts it into a laser pulse, fires it down the glass fiber, and on the other end catches that light and converts it back into an electrical signal the next GPU can read. That translator is called an optical DSP chip, and Marvell is the market leader, holding roughly 70% share of that market globally. What makes the position even stronger? Marvell isn't just leading at the current generation. While competitors are still catching up on 800G, Marvell is already shipping the next generation, 1.6 terabits per second, in mass volume. Their product is called ARA, built on a 3-nanometer process node. It's the first 1.6T optical DSP to reach mass production anywhere in the industry. By the time competitors arrive at 800G, the next design cycle has already started without them. But there's a second business line at Marvell, and this one is the main battlefield of the hidden war. It's called custom ASIC. You've probably heard that the major cloud companies, Google, AWS, Microsoft, Meta, are all designing their own AI chips. They want to reduce their dependence on Nvidia's off-the-shelf GPUs. But designing their own chip doesn't mean starting from scratch. They need a partner, someone with the chip design IP, the engineering depth, and the integration expertise with TSMC's most advanced process nodes. The companies that do this at scale globally are essentially two: Broadcom and Marvell. According to Bloomberg Intelligence, together these two companies control approximately 95% of the custom AI ASIC co-design market. But that 95% is split very unevenly. Broadcom holds roughly 70%. Its client list is formidable. Google's TPU chips, a partnership that dates back to 2014, 7 generations of co-designed silicon. In April 2026, Broadcom and Google formalized a long-term supply agreement running through 2031, covering both TPU development and networking components for Google's next-generation AI racks. Add to that Meta's MTIA accelerator and OpenAI's custom chip program. Broadcom CEO Hock Tan told investors on the earnings call that he has clear line of sight to over $100 billion in AI chip revenue in fiscal 2027, with a disclosed backlog of $73 billion. Marvell holds roughly 20 to 25%. Its anchor customers are Amazon's Trainium series, the training chips that power AWS's AI infrastructure, and Microsoft's Maya AI accelerator. Two customers, both in catch-up mode relative to Google's TPU program, both ramping fast. On the surface, Marvell looks like the challenger, but the challenger's story isn't always the less interesting one, thanks to string. Now the numbers. On March 31st, 2026, Marvell announced something that didn't get as much attention as it deserved at the time. Nvidia invested $2 billion in Marvell, but the money wasn't the real headline. What came with it was a framework called NVLink Fusion, a platform that allows Marvell's custom-designed chips to plug directly into Nvidia's NVLink interconnect ecosystem, running inside Nvidia's AI factory architecture. Think about what that means. Marvell is already designing chips for AWS and Microsoft, chips explicitly built to reduce those companies' dependence on Nvidia. And at the same time, Nvidia just invested $2 billion in Marvell and brought its chips into its own infrastructure stack. The financial trajectory reflects this acceleration. In Q1 fiscal 2027, Marvell's interconnect business, which had been guided to grow 50% for the full year, was revised upward to more than 70% year-over-year growth. The driver, demand for 1.6T optical modules, is arriving faster than management expected. Marvell raised its fiscal 2027 full-year revenue outlook to approximately $11.5 billion and its fiscal 2028 outlook to $16.5 billion. Starting from $8.2 billion in fiscal 2026, that's nearly a doubling in 2 years, driven by optical interconnect, custom ASIC, and NVLink Fusion, all accelerating at the same time. So how does the market read this? Jensen Huang's trillion-dollar comment sent the stock up 32% in a single session. But after a move like that, the real question begins. At the close of that day, Marvell's market cap was approximately $250 billion. To reach $1 trillion, the stock would need to gain roughly another 300% from there. The bull case rests on market expansion. TrendForce projects that ASICs will account for 27.8% of AI server chips in 2026, up from 20.9% in 2025. If that secular shift continues, the total pool of revenue available to the Broadcom-Marvell duopoly grows substantially. Marvell sits at the intersection of two accelerating segments, Optical DSP and custom ASIC, and now has NVLink Fusion as a third vector that didn't exist before. If all three compound, the numbers can get very large. The cautious case comes from the competitive structure. Counterpoint Research published a report in January 2026, projecting that Marvell's share of the ASIC design services market could decline from 20 to 25% today to approximately 8% by 2027. The reasoning: Broadcom's customer wins are compounding. The Google through 2031 contract locks in years of forward revenue for Broadcom in a way that leaves shrinking room for challengers. The more Broadcom's clients expand their ASIC programs, the harder the available market becomes for everyone else. Both projections have numbers behind them. They point in completely opposite directions. So what does Jensen Huang's statement actually mean? One reading is a moat. The larger AI clusters become, the more cross-rack optical transmission they require, and the more indispensable Marvell's DSP chips become. The $2 billion investment and NVLink Fusion integration position Marvell as a foundational infrastructure layer inside Nvidia's AI empire, a layer that's very hard to route around. Another reading is capture. The custom chips Marvell is designing for AWS and Microsoft, chips explicitly built to reduce dependence on Nvidia, now run on Nvidia's interconnect fabric under NVLink Fusion. Customers think they're building a path away from Nvidia, but Nvidia just invested in the company, paving that path. In the entire AI landscape, Marvell occupies a position that's genuinely rare. It's not the biggest, it's not the fastest growing, but it's the one that both sides of a fundamental industry divide need at the same time. That kind of position has historically been the strongest kind of leverage. It has also historically been the most precarious kind of middle ground. Worth watching closely.